Hey, good morning, everybody. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review weekend edition. Before we get started, I want to talk about three pieces of software that I find indispensable. I once had a friend for whom I have the utmost respect admonish me against shilling for the software companies. But I feel strongly that traders can and should benefit from highgrowthstock.com, freestockcharts.com, and marketsmith.com. So, shill I will. Let's start with MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com, and you don't even need a credit card. And that's our commercial for this week. Okay, much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. So let's take a quick look at that. The C in CANSLIM stands for current quarterly earnings and sales, and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and or sales, and preferably accelerating earnings or sales. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of at least 25% annual earnings growth over the past 3 to 5 years. The N in CANSLIM stands for new products, new management, or perhaps new market conditions. The N reminds us that we need something new and exciting to sustain longer-term profit. The S in CANSLIM stands for supply and demand, and reminds us that we want to favor stocks that have an average daily volume of at least 500,000 shares and trade at least 140% of their average daily volume on the day that they break out. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. We'll come back to that in a little bit. The I in CANSLIM stands for institutional sponsorship and reminds us that we want to find stocks that the institutional or professional fund managers are accumulating. And finally, the M in the CANSLIM acronym stands for market and reminds us that according to research, 75% of all stocks will follow the market. It's critical for our success that before we begin trading, we understand the current trend in the market. Okay, as we noted, the L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify the market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 14 came from biotech, 10 came from precious metal mining, 5 came from medical equipment, 5 from medical devices, and rounding out the top 5, we had 5 packaged foods. We're seeing a lot of medical devices, medical equipment. Certainly we're seeing a lot of precious metal recently. Packaged food and biotech have been showing up quite a bit recently as well. These may be good places to look for leadership in this market going forward. Let's take a quick look at the Nasdaq Composite. Friday, the Nasdaq closed up 7.15 points or 0.14%. We closed at 5162. Trading volume was heavier than the prior day, giving us an accumulation day or a day of professional buying in the market. For you followers of William O'Neill, we are in a confirmed uptrend. We have been since June 30th. We have two fairly minor distribution days since the market confirmed the uptrend, and I wouldn't be very concerned about distribution at this point. Our market timing model is on a buy signal. Right now, the Nasdaq tested resistance up here in the 5164 area and seems to have blocked at that point for the time being. We'll call that resistance, and we'll call support this trend line. This trend line goes all the way back to the beginning of the bull market back in 2009 and has offered significant resistance over the past year. Now, hopefully it will act as support. We'll see if we can break above this 5164 area and make that our new area of support. See what the S&P 500 is up to. But before we do that, in spite of a much weaker than expected GDP report, stocks edged higher on heavier trading volume on Friday. The S&P scratched out a 0.16% gain, the Nasdaq 0.14%. Both the Nasdaq and the S&P 500 continue to respect significant support. For the Nasdaq, that's the psychologically important 5,000 level. For the S&P, it's the May 2015 high in the 2134 area. Our market timing model for both the Nasdaq and the S&P 500 is on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Investors.com is indicating a confirmed uptrend in the market with 2 distribution days on the Nasdaq and 3 for the S&P 500. Friday, advancing issues edged decliners by better than 3-2. New highs continued to handily outperform new lows, but new lows are beginning to creep higher. Large capitalization stocks bettered small and continue to outperform on a 10-day moving average basis. The fastest market gains generally come when small caps are outperforming. We're on a buy signal on both the S&P and the Nasdaq, but the current advance may be losing some steam. The S&P has been indecisive and trading in a tight trading range for the past 2 weeks. The Dow Jones Industrial Average, which we don't often talk about here, has been showing weakness for a while. Only the Nasdaq has been behaving bullishly recently. Although we are on a buy signal and traders should be fully invested or at least approaching fully invested, we should also keep our stops in place and current. Okay. On Friday, the S&P was up 3.54 points, or 0.16%. We closed at 2173. Trading volume was heavier than the prior day and well above average. That's an indication of accumulation, which is professional buying in the market. The S&P 500 is in a confirmed uptrend, and we have 3 distribution days, but note that this distribution day will be falling off of the count due to age shortly, and these 2 distribution days really weren't that decisive, and so aren't really a concern at this point. Our market timing model is on a buy signal. The S&P is bracketed by support right here in the 2134 area, and resistance, I suppose, at this high. The S&P has been really kind of locked into a trading range here, and I would look for a decisive move out of that trading range, either lower or higher. Hopefully for the bulls, we see that we break out of that range to the upside. Okay, let's talk a little about swing trading. Swing trading is a faster and shorter term form of trading than can slim. In swing trading, we'll attempt to always trade in the direction of the short-term market as defined by the relationship between the Nasdaq Composite and its 5 and 10-day simple moving averages. Our swing timing model has 4 signals based on those relationships: buy long, trending positive, trending negative, and sell short. Swing trading utilizes a much shorter term setup than CanSlim. Those setups, both long and short, are short-term consolidations, flags, and bounces from significant moving averages. These setups can be as short as 5 days. We try to initiate all swing trades with stop limits, buy or sell, at the precise breakout point, but will generally only close positions at the end of the day. Our swing trading targets are typically going to be a 10% profit with a 3% initial stop loss. Swing trades typically last up to 10 days and require strict adherence to our rule sets. Let's take another look at the Nasdaq Composite. On Friday, the Nasdaq Composite closed well above its 5-day simple moving average, which we show in pink, and its 10-day simple moving average, which we show in green. The 5-day moving average is trading above the 10-day. That's our definition of a buy-long signal, indicating that traders can take swing trade positions to the long side. Currently we hold 5 swing trade positions: AMH, DW, RICE, all of which report earnings this week and all of which we will sell prior to their earnings reports. On Friday we bought 2 positions. The first, VEEV, we bought on the breakout from this consolidation. And secondly, ABMD, which we bought on the breakout from this little mini consolidation. For more information on swing trading, please contact me. My contact information's on the homepage. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the homepage. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.